Hello everyone. We are going to do a video today on my favorite company in the world, Tesla. Now, why is it my favorite company? Because it's so overhyped, so unbelievable. Literally, people think I'm a moron. People think I'm stupid for not understanding it. I don't understand it. I don't understand how to pay so much for such low revenue and such low profit. We're going to look into the fundamentals of the company. For those of you right now who are watching it, expecting me to say buy, just watch the end of the video and I'll show a financial way in which we look at the company, not just some overhyped, exciting way. They're issuing shares like crazy. You know, they're still involved in a lawsuit in which shareholders are suing Elon Musk because he bought his cousin's business and they thought it wasn't his fiduciary responsibility to not buy the business because of how bad it was. So even Elon Musk, who I think is a brilliant man, is getting sued by his Tesla fanboys for doing something they thought was an irresponsible use of the company's money, which I don't necessarily disagree with. It's a little, to me, in the world of corporate governance, why go buy your cousin's business that's losing money to merge it with your company? I mean, that just screams. I always tell people in our company, if you sit there and go, I wonder if I should do this, you probably shouldn't do it. If it's even a question of, should I do this or not, you probably should not do it. Yeah. I'm not saying overall, but if you're questioning if something would look bad or be construed as biased, just think about it over and over again and just go, should I really do this? Unless there's a real good reason why you should do it, which I haven't heard of that yet for the acquisition of the solar business, but either way.
Yeah, haven't either.
So we're going to use our 8-pillar software through everythingmoney.com to analyze it. Links below, we'll explain more of it later, but let's go forward. $620 billion market cap. PE of 557, that's an X. Now, for all of you companies out there, all you fanboys out there who tell me, Paul, you don't get it. Tesla's not a car company, it's a tech company. Okay, cool. 3.1% profit margin. You're right, it's not a car company because other car companies have about double that profit margin. But for those tech companies out there that you guys say are all tech, let's go look at what other tech company profit margins are. Here's a tech company, Apple. What's their profit margin? 23%. Okay. What is Microsoft's profit margin? 35%. What is Google's profit margin? 26%. What is Oracle's profit margin? 34%. Oh, so tech companies out there with profit margins 8 to 10 times higher than Tesla. Guys, Tesla is not a tech company. You can sugarcoat it any way you want. It's an auto manufacturer. That is it, okay? They're a $600 billion in market cap auto manufacturer. That's insane. With the revenue of $36 billion. Okay. Price to sales ratio of 17.24. This is the market cap divided by the sales. To give you an example of other car businesses, Ford and GM are between 0.5 to 0.7 times sales. So this is only about 35 times more than the other car companies. But you're right, it's probably not a car company. Oh, and by the way, let's go back and look at the other software businesses. Oracle, 6 times price to sales, so 1/3 of Tesla's. Microsoft, 13, still less. Apple, 7.4. So you're right, Tesla is definitely a tech company. No, it's not. Okay, next thing, no dividend. Let's go to their income statement. Definite revenue growth here, guys, big time. 8.5 billion to 36 billion. Absolutely huge revenue growth. Net income growth. Well, it's pretty easy to have net income growth when you lose money like crazy and then finally started making money. So guys, in the last 10 years, this amazing company lost, praise the Lord. Finally made money.
And don't forget, even when they were losing all that, they had tons of tax credits coming in.
And there was lots of tax credits coming in,
Yep.
exactly.
Yep.
Now guys, here's another big one. Shares outstanding, the killer of companies, of investors. 810 million and 961 million. Now, I will give Tesla credit. Instead of issuing debt, they're diluting you as an investor. Your fanboy talks about how they love you so much, they're diluting you. In the last 10 years, almost in half. This is not a stock split, folks. This is literally them saying, hey, remember how you owned 2 shares of the company? Well, those 2 shares now buy about half what they did 10 years ago. So they're just diluting you. If you like that, you're stupid, and you should buy shares in my company at any valuation I give because you are a moron. All right, moving on. Current assets, $25 billion. Current liabilities, $15 billion. Plenty of cash on hand. Good for them. That's awesome. Free cash flow. Guys, what is free cash flow? Free cash flow is cash from operations less your capital expenditures. I actually prefer this metric versus earnings because earnings can be manipulated through SEC and accounting rules. I like free cash flow. It can also be manipulated, but it's a lot harder. And I added this line here for free cash flow. Minus $2 billion to a positive 2.4, check mark. Average over the last 5 years is negative. So that's an X on the multiple. And currently it's selling for 640 divided by 2.4 equals, what is that? 280 times free cash flow? Is that right?
Hold on, I'll do it right now.
Please tell me I'm right. I'm going to be like so in love with myself.
640 divided by 2.4?
Yeah.
266.
Oh, darn. I said 280. It's 266. So it's 266 times free cash flow. For those of you who think that's pretty good, let's go look and see what Ford's is. Ford probably didn't even have one. Free cash flow.
By the way, Ford's disruptive now.
Ford is selling for 4 times free cash flow in the last 5 years. 4 times. 4 versus 266. Now you're going to say, Paul, you don't get it. Growth. I'm glad you brought it up. We have this thing called the Stock Analyzer tool. It will factor in your growth into the equation. Now, let's go to the Stock Analyzer tool to determine what is this stuff. By the way, here are the 8 pillars right here. A lot of red. Some green, that's good. Revenue growth, net income growth, I love it. Let's go to the Stock Analyzer tool. Let's do a 10-year analysis. So guys, here's their revenue growth over the last 1, 5, and 10 years. So for those of you who tell me it's going to keep growing like crazy, what do you see happening here? This is with an acquisition along the way too. They acquired another company as part of that. They acquired it, and that's the only reason they got these numbers here. Sorry, not this one, these other ones. So I'm going to make my assumptions. Mo, can you please go do your charts, and then I'll make my assumptions and go from there.
Yeah, so dating back to December, if we let's just draw a line straight across. You can see that it has this crazy volatility, but it's just stuck in that range, with the exception of this little pop right here that happened in January. It's really not moved that much. Now, there's a lot of people in the bid and ask nation that make a lot of money on this thing day trading it because the volatility on a day-to-day basis is just insane. So that is my recommendation to you of how to approach this thing, just because you get these crazy swings. I mean, the size of these candlesticks is awesome, but not normal. So right now, it's moving through the sweet spot nicely. You can, even going long on this thing, I think you have a strong resistance point here just below 700. Now let's look at the daily chart just to see what we are contesting with, and it's a mess. So right now, you're sitting at the 200-day moving average. Just above it, you have the 100-day moving average. This is confusing because you have so much resistance and so much support, and there's not a lot of room to grow or go in either direction or the other. So in my opinion, day trade this on a 15-minute chart. Stay away from it on a long-term chart. But if you do it on a long-term chart, keep tight stops. Tight stops are key to this thing. What do you got over there?
All right, guys. So here are my assumptions I made. I went in on revenue growth, assuming 20, 25, and 30% a year for the next 10 years. For those of you who think this is okay, 30% revenue growth would make this company do $500 billion a year in revenue in 10 years. For those of you who think this is normal and okay, you're crazy. Like, this is a car company. Is it possible? Of course it's possible. Is it probable? That's the point of investing. I did other assumptions that are very reasonable, but also aggressive on the high side. And guys, PE, I put it 20, 25, and 30 times. There are people out there also who are stupid who say that 10 years from now they should sell for 70 times earnings. Again, I don't want to get into what Microsoft, Apple, Google, and those other amazing companies that actually did change the world are selling for, but they're selling for about 35 times earnings, which is still high for them. The bigger the company, the lower the PE should be because your growth potential is lower. This is still very aggressive. Guess what, guys? $644 price. Current value? The highest value I have, all the rosiest of rosy assumptions, $630 a share. It's still not worth what it's selling for. I have on the low side, $30 to $50 a share. Middle side, $130 to $180 a share. Tesla is overpriced. Absolutely overpriced. The companies that drive up the bull market when the bubble pops will be the ones that fall the most.
Will there ever be a day that you own Tesla?
I'm sure there will be. I'm sure there will be. Just like there were days when buying, it's so funny. Everything to me is based on value. What I'm paying for the value I'm getting, right? When it's disconnected on the good, where price is lower than value, I buy. When it's the other way, when price is higher than value, I don't buy. But guess what? No company in history has ever been undervalued or overvalued forever. Over time, the real value comes out. Warren Buffett says it. In the short run, every stock is a voting machine. In the long run, it's a weighing machine. There'll be a time when when Tesla is growing at 10% a year or less, and people say, oh my God, it's such a dead company, the stock plummets, and I'll be a buyer of it.
What if you own Tesla right now? I know you're not going to tell us whether to buy or sell, but
then I want you to pray that it works out for you, because I just don't think it's. I mean, if you buy 100 stocks just like Tesla that match the same criteria, you're not going to do well. Could you end up being okay? Yeah, you could, but I think the rosiest of rosy assumptions has this company worth $600 to $1,000 in today's market at best with the rosiest of assumptions. I don't get it.
So Seth, who's on vacation, used to own Tesla stock.
Yep.
What if this was 25% of my portfolio, or even 40%
I think you should
of
be
my
concerned.
portfolio?
I think you should be very ready for a lot of big drops.
And if you're doing very well in it, join us and look for an exit strategy. Consider yourself lucky for what you've gotten. I mean, I think it's great if you've made a lot of money on this, but the point is to keep the money. And if you look back at what happened in March of 2020, I don't think Tesla did that well. And those companies that led the market up are certainly going to lead the market down. And I'm telling you, this is going to be one of them.
It absolutely will be one of them. This will be a company that ends up, like, guys, look at it already. It hit a high of 900. What was the high? $900.40. And it's right now at 644 after hitting 500 and some. And it has a year low of 270. Yeah, it's up from that year low a lot, but for a company that was just killing it to go over to 900 and now down to 644, people are forgetting, hey guys, it was at $900 just a few months. What was it? Yeah, the beginning of the year.
And we went to, Paul and I tried to go test drive a Model S. They told us we couldn't test drive it for 3 to 4 months. I ordered one of these cars. They're saying September or October delivery. I don't believe that. They don't even have any production going yet.
This is a company that the CEO came out and said that there were several times in the last 5 years where they were 2 weeks away from bankruptcy.
Yeah.
Couldn't they be out of that? Listen, the numbers are looking better. But this is not a stable company that should be paying. The more unstable a company, the lower price you should pay, because there's more risk factors involved.
And for you guys that are calling us Tesla haters, it's not haters. Seth drives a Tesla. I ordered a Tesla. Nicole drives a Tesla. You drive electric Porsche.
I would have bought a Model S had it been available.
Correct. Had it been available, they don't have any.
I love EV.
We've given away 2 Teslas. My father wants to put the Tesla solar panels on his house in Florida. It's not the physical items that they sell. It's the garbage that is their stock.
Keep the company and the stock separate.
Correct.
They're very different things.
Correct.
It's okay to love a company,
and
but
hate the
it's
stock.
okay to not.
I buy every single thing in the world from Amazon. Yep. Literally every single thing in the world from Amazon. I have to scroll through my orders every day to see what's being delivered that day. I don't even go to the store anymore. Oh, Paul, you need toothpicks? Great. I just order it right then and there. And guess what? I do not touch Amazon stock right now. There's no way I'm touching it. And I'm probably Amazon's biggest customer. I've been buying from Amazon since 1999. It says it on your account.
Yeah,
1999 I've been buying.
We were talking about this in your kitchen the other day. I love going back and seeing what I purchased on Amazon back in the day.
Yeah, and it was all books before, and now it's everything. Like literally, the other day I was like, oh, because I just moved. Everything I need, I just buy it on Amazon. I just bought umbrellas for Amazon.
Tim, listen to this. I was interested the other day. Could I buy a casket on Amazon? You can.
No way.
Yes.
Are you kidding me?
Yeah.
Oh my gosh.
So either way, Tesla will be a company that we own at some point in the future, as long as it survives.
As long as it survives, I guarantee we're going to own this company. And when we own it, you guys are going to call us stupid for owning it.
You will tell us we're stupid. And I'm like, okay.
Can you share your analogy about if I'm in Tesla, I own it now, it's a major part of my portfolio. You made this analogy about not having an exit plan before in the highway. Can you share that analogy again?
So, guys, the analogy we're making here is, now keep in mind, I'm actually against exit strategies in a business. But for investing, if you understand value, if you understand what you're doing, you'll know when you're going to buy, when you're going to sell. When you have no reason when you're buying or selling, that's like literally getting on the freeway and not knowing what exit you can get off of, and you're just going to sit there and hope to guess correctly. But guess what's going to happen? You're not going to guess correctly. You're going to end up in the wrong neighborhood, far away from where you're going. You're going to end up incorrect. That's no different than investing without knowing value to know when you're selling. I sit there and I buy stock. I know what I think the price is worth. When it hits that price, I reevaluate. Do I think it's gotten better or worse? If it's gotten better, then maybe I stick around and buy and keep the stock. If it's gotten worse or stays the same, I sell the stock and look for a better opportunity. That's it. So come join. Get the software, 80 cents a day, get the Discord community, talk about every investment. There are people in that Discord community, a lot of them who disagree with me on cryptocurrency, on stocks like Tesla. But if you have the right process, you will know when to get off the freeway at the right time because you know where you're trying to go. That's it. That's all I'm asking you to do is, are you okay with sitting there and saying, hey, I'm gonna miss out on the one company out of 1,000 that hits a home run, but I will get it right on the other company, the other 20 or 30 that I wanna buy that are gonna do pretty well. I always tell people, every best investor ever made it without a Tesla. I was thinking about this the other night. I'm like, I don't know any investor in the history who are considered the best investors who literally can say, I bought this one stock and it went up 1,000 times or 100 times. No, they just buy good companies, a good portfolio. Go look at Warren Buffett's portfolio. He puts it in his annual reports. There are no companies up there that are up 100, 200 times. They're just companies that did very, very well. He takes the cash flow and reinvests it at higher rate of return. That's it. That's all you need to do. You don't need the grand slam home run. You just need to be able to do a lot of singles and doubles consistently and not strike out.
What if someone has FOMO?
If you have FOMO, get to reprogram yourself. All the more reason why you need to join our community, get the Discord, because FOMO is going to cost you a lot of money. Trust me on this one. I've seen it 1,000 times. I've read it about it 1,000 times in history. You will end up losing a lot of money.
Yep, and FOMO leads to chasing, and chasing leads to you buy it up here when it's actually supposed to be down here, and then it comes down here 2 days later, and then...
If you don't know how to make money, you won't know how you're going to lose money. That's it.
Yep.
All right, guys, thanks very much. Hit the like button, subscribe, join the Patreon. It'll be the best 80 cents per day you spend for the rest of your life. You're going to look at your family and say, I wasted my money providing you food and shelter, but I got 80 cents a day on everythingmoney.com. You're going to be very happy you did that.
And then go buy a Tesla.
Then go buy a Tesla.
Bye.